watching famous games on YouTube.
What's up, guys, and welcome back. It's a rainy day here on Cape Cod, and the market is feeling some pain as well. If we look at the major indices right now, we can see E-minis down 24, NASDAQ down 55, and was talking a little bit last time with you about some kind of sort of long-term positioning, that being where do we want to be with our savings and our 401k and stuff like that. And for a lot of time, I've been in bonds and stuff like that. Now, you know, each person has their own particular financial situation, right? And so that's one of the reasons why they don't have, you know, they have all these disclaimers on videos like this, and I put a disclaimer as well because it really depends on your unique financial situation and what you're going to do with your long-term savings. Like for me, for example, my family has money. So my family's positions, I'm talking about like my parents and stuff like that. So my family's positions are going to affect me at some point in the future, but that sort of goes into my calculation as far as what I do for my own savings and 401k and stuff like that. Now, certainly we want to be independent of our family and be successful beyond something that we inherit or something like that, but it still comes into play with me knowing that my family is basically just long the market. You know, my dad's positions are basically just long the market. And so so I always have that in the back of my mind that if the market rallies or, you know, stays where it is, then I'm doing okay in the long run. And thus I have a little bit more freedom with my own 401k and stuff to do something different. But at the moment, I have been just kind of picking and choosing some stocks that have gotten hammered a lot in the last couple of months. And so, for example, I'm long Square and ARK-K as two examples. Let me see if I can just publish this to StockTwits to see if we can just get a couple people watching here, more people watching. So I'm just going to do that very quickly here. And then I'm just going to get on to, I'm just going to talk about the position in that I have in GameStop, and we'll talk briefly about the VIX, and then I will let you get on with your trading day and whatnot. All right, so let's see. So GME, UVXY, and let's see. That should see if we can get a couple more people in here. Briefly about the VIX, and then I will let you get on. All right, so that should work. All right, so essentially. We had an opportunity yesterday in GameStop to jump into a short. If we look at, let's go to the chart here and look at that really quickly here. I'll get out of the way. But we did get up all the way to 153 yesterday, and I see these pops as opportunities to put a short on because I just don't see this stock going anywhere too far to the upside. And the higher it goes, the less people seem willing to just rush in, right? Because this company has not had good news. It hasn't had good earnings. It doesn't have a whole lot of positive stuff going on right now, and its valuation continues to be very high. So when I see a rally like yesterday, I see that as an opportunity to get short, and that's actually what I did. And if you look at the long-term chart, you can see we're still in a downtrend here. So even that rush to 153 doesn't escape the this long-term downtrend. So what did I do? I probably overpaid, but I bought the I went out to July, 43 days out, this July 22 expiration, and I bought the 130 put spread, paid $250. So this is a $5 spread. I figure if I pay $250, then if this stock is below 130, by this expiration, then I can double my money on that trade. And so that's kind of the thought process I had. So I'm waiting till we get pops, and then I'm buying put spreads, and I'm just leaving them on because my hypothesis, I guess you could say, with this issue is that it will get kind of pulled back towards that 100 level at some point, just because there's just not a lot of good information or positive news out for this particular issue. And, but some people would say, oh, well, they have earmarked more shares. They're going to issue more shares, and then they're going to split the stock. Now, I don't see that as great news. It just seems to be sort of neutral. Now, I do understand that stock splits generally provide more publicity to a stock, and they can result in the stock going higher just because you've got news stories coming about the stock. Oh, the stock's splitting. It puts the stock in people's mind, and then people buy it. The actual mechanics of just splitting the stock or adding new shares is neither bullish or bearish. It's just mechanics, right? Having more shares, you would think that if they actually do issue more shares, that would dilute things. But if they actually just authorize shares just to split the stock, then that doesn't dilute it. It just changes the quantities, right? So instead of having 10 times 10, you've got 20 times 5. It's just still the same thing. If they do, now they did vote to authorize more shares than it would take to do the split that they were talking about. So if they start giving away shares to management or they float new shares, that would be dilutionary and that would be bearish. But on the face of it, just allowing the company to issue more shares to do a split is neither bullish or bearish. And I would kind of say that overall, stock splits generally seem to be a little bit bullish, just because, like I said, not because of the mechanics of the split, but just because of the fact that it draws more publicity to the company and more people seem to get on board at times. Anyway, so my long-term trading strategy on this stock has been to take the position that this is going to go to 100 and lower at some point. So I'm looking for pops like yesterday to initiate or to add to my short position. Okay, so that's that one. And you can disagree with me and still watch my videos. That's fine. You can agree with me and watch the videos, or you can, I feel that I understand completely that the majority of people out there who are interested in GameStop are long the stock and are into this whole mother of all short squeezes stuff. But I don't subscribe to those views, and so my voice is an alternative to those saying, just cheerleading the stock. I think that I would have more subscribers and more of a base if I was bullish this stock, but I can't change who I am, and I'm not bullish the stock, and that's just the way it is. So if I have less subscribers, then oh well. All I can really be is me, and me in this case is thinking that this is going nowhere at this point, GameStop, and it's overvalued in my opinion. But, that remains to be seen. I don't know the future any more than you do, and I'm not going to sit here and say this is what's going to happen in the future, because how do I know what's going to happen in the future? That's the future. It's unknown by definition. I do believe that the market overall will start to have some sort of recovery. Most people who are talking about the market selling off and recovery are saying that we have to wait until the Fed is finished with raising rates before we will see a real recovery in the stock market. Most of the time we have the stock market rallying while the economy is doing bad. In this case, the effects of raising rates, and I do believe that they're important effects of raising rates. It keeps the U.S. from going into some sort of hyperinflation situation like we've seen in so many other countries like Brazil or Romania during World War II and after. So many other countries that have had hyperinflation because they could not control prices. And so when they raise rates to cool down the economy and to control inflation, that is a good thing. Even if it hurts the stock market, something that hurts the stock market is not necessarily by definition bad for the whole economy, right? And we saw this huge pandemic where everybody was getting hurt and the stock market was continuing to be put a ton of money into it. Well, at some point you have to pay the pauper, right? You can't just stimulate, and that money comes from nowhere, because eventually it's going to be inflationary when you just put money into the economy like they did. So we're feeling pain now because of all that, and that makes sense. And, in life you have to feel pain sometimes. So there you go. As far as the VIX goes, let's take a quick look at the VIX, and I will let you get on with your day. I'm hoping that I have an alternative viewpoint to the ones out there that are just saying rah, GME and AMC are going to the moon. If you just hang in there, they're going to go to the moon eventually, because I don't believe in that. I'm also contrary to cryptos. I have so many friends that are down money in cryptos right now, and most of them are saying, oh, they'll come back. And I don't believe that they have to come back, cryptos. I think that they can just as easily not come back. So, and I have friends saying, I just talked to him yesterday, and he's saying, well, I didn't actually lose money because I haven't sold yet. All right, well, you buy Apple and you pay $200. Now it's trading $100. You can say, well, I didn't lose money because I didn't sell it yet. But reality is the value of your position has declined, right? And who knows if a crypto is going to go back up or not. I certainly don't. I have no way of valuing cryptos. That's why I don't trade them. And I certainly have missed out. I know many people have made a lot of money, and, my hat's off to you. You took risk, you got a reward. But for me, that's not what I'm focused on right now, because I can't value them. I have hard enough time valuing stocks in the stock market without getting into cryptos. Anyway, so there you are. Let's take a quick look at the VIX term structure, and I will let you get on with your day. So VIX term structure hasn't changed that much since last time we looked at it. Current contango level of 5.77%. Looking very, very healthy, I would say, the term structure right now. If we do go to the ETPs, we've got UVXY around $13. Look for this to decay further and take out that all-time low of 11.16 coming up soon. And UVIX, we can look at that too. Similar situation here, getting closer to taking out the all-time low. Now, UVIX has additional decay due to drift, because it is a 2 times leverage. A 2 times leverage product is going to have more decay than a 1.5 times leverage product, just due to the drift of rebalancing every day, right? So over the long term, this one is going to decay more than UVXY. The downside with this one is that it doesn't have weekly options, and the volumes seem good. I mean, these are good option volumes for a product that's just essentially just started recently. So I like these options volumes. I think this is going to be a great product. It's been successful so far. I'm happy. I know the guy who started this product, and I'm happy that it's working out for him and, for his financial success and whatnot. And it will become more and more viable as a tradable product as time goes forward. But these options volumes are, I think, are decent for how little of a time this product has been around for. So the term structure looking healthy in the VIX, and I think that just speaks to the fact that we are not crashing as a market right now. We're kind of in a trading range, kind of moving sideways at the moment, and we're off the lows. So I think it makes sense that the term structure is in a fairly normal state at the moment. All right, so that's all I have for you for now. Thanks for checking in with me, and do all those great things. Subscribe, leave a comment, etc., and I'll see you in the next one. Thanks for watching. Have a great day, all. Bye now.